talked to Rob a little bit earlier about the rate of inflation. There's the current way of evaluating the rate of inflation that we've had for many years, I believe. But there's the real inflation. And I'd like to hear your comments on the real inflation and where we're at on that, because it's not the same.
So are you talking about high net worth inflation or just regular inflation?
Just
Yeah.
day-to-day
I agree with
living. I mean, 10 years ago, we didn't have cell phones to the extent that we do now. Now we have to buy one every year.
I understand what you're saying. I'm just being facetious, sorry. Rob?
I mean, there's a term for it, and I forget the technical term on what that is, but it's true. I mean, I think that in probably inflation is, depending how you want to measure, and to John's point, what you consume is different and maybe higher. The only thing I would say is, and this is something I think is interesting, you go from worrying about deflation to worrying about inflation in a matter of weeks or days. And because the economy is basically, even though that may be true, and inflation has always been higher than the numbers had showed, but the big concern was deflation. And now I think people are coming around to the idea that actually you have to worry about inflation.
Perhaps the question should have been the cost of living has gone up significantly, where that isn't reflected in some of the statistics, I don't think.
Yeah. So cynically speaking, and maybe this is politically incorrect, but I think that part of what you're describing is a hidden tax, and it's part of the issue. If the world has overspent and has too much debt, how are you ever going to get away from that? How are you ever going to reduce that debt? And inflation and plucking the chicken is without as much hissing as you can. The way you do it is through a hidden tax of inflation.
Right, so I mean, it's an interesting issue to look at when you think about whether you look at average wages. Generally speaking, wages in most developed countries, and that's certainly true in Canada, have more than kept pace with inflation across the board. As long as individuals are investing in a reasonable way, they're getting a real rate of return. So in other words, their buying power over a period of time is increasing. And I would say the standard of living is measurably better in most places in the world, and in some places in the world, enormously better. So that's all post-inflation. I think you've got factors that are huge factors in terms of productivity and what you get for your dollar. If you spent $30,000 or $40,000 or $50,000 on a car today and compared it in real terms to what that car would have been able to give you 20 years ago, it's not really that close. So I think you've got that thing working for you, but I think for a lot of our clients that have relatively high incomes or significant assets, and they would be absolutely considered in the 1%, they're spending, if they're spending money on wine, or they're spending money on travel, or they're spending money on more luxury goods, the inflation rate for that basket of goods is going up very significantly each year. That's also a supply-demand problem. The supply of people who can afford those things is increasing faster than the supply of the actual underlying products.
That in combination that if you break out inflation by goods and services already the inflation is higher than goods. And a lot of the reason why goods inflation is low is because of globalization and trade. And that aspect is you're not going to get the same kind of benefit in future years on that, because the big benefit from free trade and globalization has already been taken place.